So, Larry, you don't read all of this as kind of bullish formations that suggest we've made up the damage from a few months back. You're looking at it very differently.
Yeah, I mean, we've had a fantastic run. I mean, just think about this. We've recovered all the losses from Liberation Day in 90 days. If you think back to COVID, it took 127 days. If you think back to the last time we had trade-oriented concerns in the market back in 2018, 2019, it took 146 days. So just the speed of the recovery has been incredible. And I just think we need a digestive period going forward, because I do think that a lot of good news has already been built in. You were just talking about trade. And yes, there's been a reduction in the tensions around trade, but I do think that tariffs are going higher from where they are today. We haven't really gotten those sectoral tariffs when it comes to pharmaceuticals, when it comes to semiconductors. And I think ultimately they are going to go higher, and you are going to see it start to impact the economy going forward.
So basically, you think the reason why we're perilously close to a pullback is because you still think the economy is going to slow here?
We do think it's going to slow. You're starting to see the early signs of that. The consumer is starting to feel the pinch of higher tariffs. When you look at some of the dynamics that we look at, for example, with the restaurants, you're seeing the lower end consumer struggling with fast food restaurants as an example, as opposed to, casual dining. When you look at airplanes, filling the cabin is a little bit more challenging than it is for the premium seats. So the lower end consumer is starting to weaken. And then I think you're going to start to see some weaker employment numbers going forward. And you've already seen, we're approaching 2 million people with continuing claims, right? And that doesn't mean that companies are laying people off. They're just not hiring at the pace they were before. And just by, year over year, that'll start to slow the actual growth in the economy.
Yeah, and I'm not saying they're, right about everything, but it caught my attention because I've been watching those same data points as you. Just earlier this week, Goldman was out with a big piece on the subprime consumer that was actually pretty positive, pretty bullish. They said, look, their delinquency rates on credit cards are improving. Their spending patterns are inflecting higher. So all of that flies against these narratives and some of the other data points in the economy. They're bullish on a lot of the subprime and lower income oriented stocks as a result of that, Larry. So, it just goes to show that it's hard to figure out what exactly is happening with the economy right now.
No, there's no doubt. There's a lot of uncertainty. And I think what has confused people is this difference between soft data and hard data. And, when you look at the soft data, the surveys, we don't put as much power into those anymore. We do look at these real-time indicators. And you probably saw today that credit card spending is starting to edge lower. When you look at, again, the number of people flying, it's starting to cool off. And again, that's actual physical activity in this economy. And you're starting to see that happen. Ultimately, our economist thinks that this economy could potentially see another negative print during the fourth quarter of this year. Now, we're not calling for a recession. We think we'll be able to avert a recession. But some of the hangover of the high levels of inventories, that will start to weigh on this economy going forward.